Rajesh Jejurikar, Executive Director and CEO with Mahindra & Mahindra joins us now. So nice to have you in ET Now. Thank you for joining us.
And in our studios. Thank you for being here.
They're like boom time for SUV.
It is indeed.
And will the boom time continue for next 3 years if I have to ask for that as a big picture scenario?
I think SUV as a percentage of passenger vehicles, firstly it's more than 50% now.
It's crossed 50 now.
Yeah, it's crossed 50.
Last count was 40.
For the last year, I think the last quarter has crossed 55.
Wow.
And that's something which is prevalent around the world. So it's not like it was totally unexpected. Of course, in India, we have to understand that there are many SUVs which are actually crossover platforms, and that's enabling the market size to get bigger because they're able to come in at lower price points. So we are actually in a good place because we've been an SUV company all along, and we think this is a trend which will continue because the many things about SUV in an India kind of context. SUV represents much better status, ground clearance, sitting height. These are all very important for Indian customer space because of joint families or having visiting families. So several enabling factors, fortunately for us.
There are 40 SUV brands now, is what I've been told.
Yeah.
Everybody wants to have a piece or a pie of the SUV market.
Yeah.
That's a growing market.
Yeah.
When there are 40 brands which represent one category,
Yeah.
don't you think somewhere the pricing power will come back to the consumer in that case?
So I'm going to answer this question in two parts, Nikunj. One is, when you have multiple brands, it helps categories grow. So, and that's what we're seeing happen. In this crowded market, we've taken a very conscious call over the last 3 years in particular on the kind of SUVs we want to make. When you think about it, you may say that, if you're going to have a strategy which is very niche and you're going to have a highly differentiated, authentic SUV strategy, you actually can't get volume. Last 4 quarters, continuously, we've been number 2 by volume, over and above being number 1 by revenue market share. So even with our currently focused, differentiated, authentic SUV strategy, we are able to sell volumes and be at number 2 level in a market which, like you said, there are 40 brands. So I think pricing power will be around how much differentiation you try to bring in. And if you have a differentiated portfolio, customers will want to buy you. Our average XUV 700 price right now is more than 25 lakhs. We hadn't thought 2 years back that a Mahindra would sell at an average price of 25 to 30 lakhs.
You've taken the 50 to 20, 20 to 25.
That's correct.
25% is the net premium advantage, brand advantage you're getting now.
That's correct. So if you have a differentiated offering which is well packed, customers are going to be willing to pay for it. But that, like we've always said, that doesn't mean we go indiscreetly or recklessly and increase prices and lose the value proposition. It's about getting that sweet spot right.
But you don't expect any kind of an SUV war. I mean, the incumbents, can they come back? Can the Koreans come back? Can the Europeans come back? And what could be called as a price war? Maruti has triggered a lot of price wars in the past in the sedan market.
Yeah.
And now they are coming up with new launches because they have less than 20% market share in SUV. You are hitting them where it hurts them the most, the sedan market. So can there be a price war in the SUV market?
Once any segment is 50-60% of the overall category, which the SUV is right now, you would expect a high level of competitive intensity. I mean, you would, like you said, there are 40 brands. Why would not every player want to come in and be part of that game? So certainly we would expect high level of competitive intensity, and which is all the more reason our strategy is going to be about driving high level of differentiation, have a very differentiated portfolio, and do products which we believe go well with our brand DNA and which also appeal to the Indian consumer. So it's not like, okay, it's working in some other part of the world, so let's do that here because that's the platform we have or that's the product offering we have around the world.
What's the game plan when it comes to overall EVs in terms of the overall capex as well that has been lined up till FY27 as well? There were some ambitious plans here.
Yeah, so clearly we're preparing for an EV game, Avansh, and we've said that between 20 to 30% of our SUVs, we just spoke about the competitive strategy in the SUV game, would come from electric vehicles in 2027. And again, there we have a very differentiated EV offering strategy. We're not playing to the let's sell to those who want the greatest level of economic advantage. Of course, that would be a reason to buy, but to get that level of economic advantage, you need to be driving 150 kilometers a day. Not many people are going to do that. We believe that there are many other reasons why people will buy our EV offering. One is the design style, the standout look, the human-machine interface, which is it's going to be a very software-driven vehicle. So that's going to be the basis of competitive advantage and differentiation. As you know, we've also done a second round of fundraise with Temasek, and which is valued that EV businesses
15% higher valuation
than what we had with BII at $9.8 billion. Yeah.
All questions on RBL go to Anish, or can I throw one or two at you as well?
I will maybe quote unquote Anish as a reply. So go on.
No, my only point is that I've had the pleasure of tracking Mahindra and Mahindra for years now. And last 3-4 years, the capital allocation change has been fantastic. An absolute reboot in terms of capital allocation policy. For a group of your size, a small investment, how will this move the needle? Whether it's core, non-core, I don't know. But how will this move the needle? Because the amount of scrutiny you've come under because of the small investment of 450-500 crore, was it worth it?
Yeah, Nikunj, let's just try and recap, and I'm going to kind of play out some of the things that Anish has said on this over Friday, because this was a key topic of conversation across the meets on Friday. We've said we are not going beyond 3.5%. There's no plan to do that, right? So firstly, any speculation that may be there on what's the extent of deviation we may be doing from a capital allocation policy doesn't cross the 400 crores kind of thing. The second is what Anish has said, I think, is that it gives us an option in case opportunities come up in the future. 400 crores is not a high amount of money to put in a business, in a sector in which we already have a market cap of 40,000 crores plus.
Yes.
Right? So if you're putting 400 crores in today, you have an option of seeing where does that go over the next 5, 7, 10 years, or you have an option of saying it's not going anywhere, we can get out. And we are very unlikely to lose money because we've bought in at a very attractive price. So I think Anish has been able to convince a lot of the analysts, and you're already seeing the impact of that on the stock market today.
If things don't work the way you're thinking, it may just end up becoming a treasury operation.
That's correct. I mean, on a treasury operation, you're likely to make money. And in any case, there could be an opportunity, as Anish has been saying, to help us learn the sector a little better in whatever way that conversation could go.
The same investment could have been done through Mahindra and Mahindra Finance also. Their balance sheet can easily absorb 400 crores. Yeah. And they could have also made the same treasury gain. For them, it would have been more strategic fit. And all the questions we are asking you today, if this investment would have been done in Mahindra and Mahindra Finance, those questions would have not been asked. How about that?
Nikunj, and again, this question has been answered, so I'm going to recap. It's for us as a shareholder to learn the business and give the option of, as a shareholder, to decide what's the implication on Mahindra Finance if banking was to open up 5 years or 7 years later for non-banking financial institutions. And in that scenario, should Mahindra Finance move into becoming a bank or not is a shareholder decision, right? And we felt, since this is a shareholder decision not impacting immediate outcomes of a financial services sector, we as a shareholder should make that investment.
Just one follow-up question, and that's not about this deal, but in general about the importance of NBFC business. You need the NBFC business to sell cars. The second-hand business is doing very well. Is this also some kind of an indication that you're getting ready for the turf, which is that NBFCs up until now were given a lot of free hand by RBI, but stringent norms are coming. Maybe this is Mahindra and Mahindra's attempt to diversify their risk away from NBFC because you see the landscape changing in 3, 4, 5 years. You're preparing it early.
Yeah, I would just maybe paraphrase Nikunj to say we are preparing ourselves for future scenarios by way of...
That's a fair assessment.
And to say that we should, we spend 400 crores out of the, cash streams that we have, including not taking money away from Auto Farm to pay for this and paying it out of the services. I think it's, the way we think about it is a good thing to do to prepare ourselves for the future, and we have all the options to play that out.
Are we done with RBL?
No, you started with one question.
It's just that the answers were so interesting that I was intrigued. The answers were so important that I was just drawn into it. But thank you for patiently agreeing to answer one, but actually answering 3 questions. Thank you very much.
Yeah, I'm not going to ask on that, so no need to worry. But it's been tractor volumes that have been surprising very well. There have been a lot of new launches. There's an increased distribution network as well. So in light of all of this, is this trajectory going to continue for tractor volume growth?
Yeah, so I'm going to answer in 2 parts. One is the tractor industry, right? Tractor industry comes off a very high base of F23. We think there will be low single digit growth. Many positive enabling factors in the rural market. The rains coming in July, even though little delayed, has not affected sowing. So Kharif sowing is good. The Rabi crop last time was good. We expect government spending in rural to go up as we move into multiple elections, state and then national over a period of time. So several enabling factors. But right now we are not changing from low single digit for the industry because we would rather wait and watch, and we know that the tractor industry is on a high base. We've been gaining market share. We gained again YTD July about 0.5% on top of a very good growth last year. We see further upsides because there's a segment of the market, the orchard and the lightweight tractors, where we have a lower presence than our national market share. We've just launched Swaraj Target, a new product there, and we're going to launch the Mahindra Oja on 15th August. So we have 2 big launches happening in a segment in which our market share is 30% compared to our national average of 42%.
We look at the car industry sales, the passenger car business growing at 4%, aggregate picture. But we look at the SUV market growing at a different rate. How much of this growth is also a factor of this demand squeeze or product availability squeeze which happened in 2021 and 22? So right now, are the numbers looking strong because you're adding more production and this is pure booking which is you're delivering?
For Mahindra?
For Mahindra.
See, right now our even though we have a wait period, and that's why we started putting out new bookings on top of what's the open bookings. The new bookings for most of our products are still higher than our enhanced manufacturing capacity.
New bookings are still higher than enhanced manufacturing
capacity, right? So I think that's the key thing to track. So right now we're producing at 37,000 is what we did in July, which is very close to our current capacity. As you know, capacity will go up to 49,000 by the end of the financial year. Our new bookings are 45,000 plus, right? So the new bookings are higher than the rate of production. And hence, the waiting periods are still not coming down as much as we want to, because unless we are able to produce to beat new bookings and cover earlier bookings, you're not going to bring down waiting period dramatically. So that's the endeavor as we get to the next phase of capacity increase.
And I believe that the demand for the premium models like the Scorpio, the XUV 700, that continues to remain strong. Are you seeing sluggishness in any category like the Bolero, XUV 300?
Yeah, like I said a little earlier, the segments which are less than 10 lakh price points have been slow for the last 12 months, and both Bolero and 300 are in that segment. And of course, there's even greater competitive intensity.
So where does that leave your overall EBIT margins at, looking at these metrics?
So, we did very good auto PBIT margins, as we call them. We were last year Q1 at 5.3, and this year we've gone to 7.5. 7.5 is close to our F19 level. Now, when we look at margin as a percentage, as we often have said, when you're in an inflationary situation as we are, we've seen commodity increases of even now adjusted level 15-17% after the correction has happened, plus BS6 that happened in the March of 2020, and then BS 6.2 now. So there is commodity and then there is product change for regulation. We're still able to maintain a percentage margin of what we had in 2019. So I think we've done very well through managing model mix and pricing and overall cost to be able to get there.
I mean, till August is perhaps one of the biggest months for SUV launches. That's what industry tells us in terms of what the industry would be launching. Historically, we've seen that the attention and the market share always gravitates towards new launches. For example, you ruled the market in 21 and 22 because of new launches. How will you counter with the new launches which now are A, coming with an edge, B, they are coming with the fact that the peers and the industry knows that, look, this is the product available in the market, we need to do it better in terms of modification or in terms of the pricing?
Yeah, Nikunj, you're right that new products always tend to get an initially high traction, and we've seen the benefit of that as well. We've had our share of that too, and maybe one may want to call it a variant, but we launched Thar two-wheel drive in January. We were able to launch that at a sub 10 lakh price, and that's what helped get Thar into momentum, right? So a new product doesn't always have to be something completely new. If you're able to create a proposition and a
Like Scorpio you did.
Yeah, Scorpio N is now just a little over a year old, so it's not certainly not in the old category. I don't think we've fully leveraged the opportunity of that. The interesting thing in our portfolio is we have Bolero, which is 23 years old, and still remains 9,000 plus. It was launched in 2000. The original Scorpio was launched in 2002, and Scorpio Classic demand actually went up with the refresh that we did, and after we launched Scorpio 9, so Scorpio N. So in our kind of products, because of the kind of customers we have, we actually don't see our products going to decline like a lot of the others, because the differentiation is so high that customers are buying us even more with time than they would out of the new, okay, here's something new and let me just go and do a one quick flirtatious swing there.
So just to bring it for our viewers, if I look at the platforms you have, Scorpio is a platform, XUV 500, XUV is a platform, Bolero is a platform, Thar is a platform. You are in no hurry to launch any new platform per se, and your existing platforms you think will have at least 3 to 5 years of shelf life. They may have variations here, engine size, chassis size, those are variants, right? Thar will become 4-door is what I've been told. Those are all platforms. Those are all incremental changes.
That's correct.
But your platforms you think are built to last for next 3 to 5 years?
We think our platforms are built to last for longer because unlike the past, this time we've done very good work over the last 5 years in creating very future-ready platforms which are very lightweight, very good powertrain solutions, both gasoline and diesel. So at least 5 to 7 years plus, we don't think we need to do anything on platforms. We're going to be basically creating products on these platforms. In the ICE world, we're creating new platforms on the EV space. As you know, we're going to do the InGlow platform.